Hi everyone, and welcome back to today's Morning Report. Charles Perez on Tuesday, the 16th of February, with me, Richard Perry, market analyst at Hantec Markets. Let's look at dollar yen, and dollar yen has been obviously on that huge run lower, and it's started to retrace it. But is that retracement coming under pressure now? The technical signals on the daily chart are certainly turning around. On a daily basis, you've got the buy signal on the stochastics. You've got the nice recovery on the RSI. Now you're looking out for the Fibonacci levels, and breaking above 23.6% fib should theoretically take you towards 38.2%, around 1507. But just today we've had the turnaround once again in sentiment, as sort of markets have taken this sort of news out of the OPEC meeting with Russia as being a slight sort of negative. The oil price was up sort of 5% earlier, now only 2% higher. And it certainly has seen a bit of a return towards more of the safe haven plays. The oil price, the Japanese dollar yen price was rising quite nicely, but then just started to fall over, didn't it? Look at that bearish divergence on the RSI. MACD lines crossing over negatively, and also stochastics bearish divergence. So that doesn't necessarily suggest that that's all that great for the continuation of this recovery. And breaking back below are also breaking back below the 1420 pivot line as well. Had been supported 1420, broke out to the upside nicely, found support on it, and it's just breaking down back through it again. So that's arguably completing a small top pattern if that continues, which it certainly looks like it could well do. So the momentum is sort of turning disappointingly lower on the near-term basis. And I think that ultimately breaking back below 1420 is not a good sort of development, really. Certainly not for the continuation of the bull run. 113.15 towards 1420, so about 100 ticks now. I see as your key line. I'd say you'd probably neutral within this band. If you break back below 13.15, I think that's a negative and a real negative move. And I would say that now you're sort of in, as I said, about 100 ticks worth of sort of neutral zone, I would call it, where if you're sort of trading above 13.15, okay, that's you're just sort of hanging on to a possible recovery. But this sort of deterioration in the momentum is certainly now taking the shine off the recovery, and it looks as though the bulls have lost control near term. And it'll be interesting to see if they can regain their poise. But certainly, I think that big support of 13.15 is the level you need to watch out for. If you break below that, I think you're turning negative again and probably going to retest the lows. But for now, you're just hanging on to this sort of recovery outlook. And I think there is possibility of further gains if towards 15, sort of that 38.2% fib level, if the bulls can regain that sort of impetus that has just been lost in the last hour or so. So I wish you good luck in your trading today, and I'll speak to you later, I think.